This is the Daily Market Comment by Rafi Boyadjian. I'm Maria Bashir. Thanks for joining us at XM.com. Fed Chair Jerome Powell waded into the policy debate on Friday, adding his much-anticipated view on whether or not the time has come to press the pause button on rate increases. Markets were braced for Powell to endorse one final hike, but that didn't happen. Powell took the markets completely by surprise, steering the debate firmly in the direction of a pause, just as several of his colleagues had flagged the possibility of more tightening. Citing the uncertainty about the lagged effects from both the rate hikes to date and the credit tightening from the banking stress, Powell said we can afford to look at the data and the evolving outlook to make careful assessments, in his clearest signal yet that the Fed is about to enter a wait-and-see period. Rate hike expectations for the June 14th policy decision were quickly scaled back, though investors are still pricing about a 16 to 17% probability of a 25 basis point move. But what's more striking is that market expectations for rate cuts for the second half of 2023 only went up slightly after Powell's remarks. Should Powell keep the door wide open to further tightening at some point after June, this may not only win over the hawks, but it would also send the markets a clear message that the Fed has no intention of cutting rates this year. This is probably why the market reaction to his unexpectedly dovish stance was somewhat subdued. The US dollar slid the most against the yen and risk-sensitive currencies, but retreated more modestly against European currencies. The Aussie and Kiwi are likely benefiting from hopes that the strained ties between Washington and Beijing might be thawing after President Biden told reporters at the G7 summit in Japan that he expects relations with China to improve very shortly. On Wall Street, all three main indices closed lower on Friday, although the S&P 500 and NASDAQ still managed to end the week with solid gains. Uncertainty about the debt ceiling is starting to unnerve traders as the June 1st deadline approaches. The White House and congressional leaders have just days to reach a deal on raising the debt limit, as any agreement would take time to get through the two chambers of Congress. This is today's Daily Market Comment. Thanks for joining us at XM.com.